Good evening, good evening, good evening. Happy Tax Tea Thursdays with Tish. How is everyone doing this evening? I see we have some people tuning in. Thank you all for joining on this Thursday evening. I hope everyone is doing well this evening. It's been a busy day for me. Thank you all for joining me today. Again, I am Letitia, the tax wealth advisor and owner of LT Financial Solutions, where we specialize in helping business owners and individual earners maximize their deductions and minimize their tax burdens. Thank you all for joining me tonight. I don't plan to keep you all too long. Tonight, we're going to talk about tax deductions that you could be missing out on as a business owner or a high income earner. If you are ready to learn about saving money by uncovering deductions, then this live is for you. I do have my phone to the left of me, so if you all see me looking off, I will be reading the comments from other social sites that I am on. So I do go live from YouTube as well. So you all can catch me on there, and I will be live from my business page. So let's go ahead and get right into it. So today we're going to talk about why does deductions matter. So let's talk about identifying and claiming deductions and why it's crucial for your financial health. So one of the reasons that claiming deductions is crucial for your financial health is because, of course, it helps you save money by reducing your taxable income. Of course, the more eligible deductions that you have, the lower your adjusted gross income will be, or taxable income. Another reason that claiming deductions is crucial because it will help you free up your cash flow for other investments like growth or personal growth goals. Hey, thanks for joining. And another reason that tax deductions is very crucial to your financial life is because, of course, it avoids you from overpaying taxes to the IRS. And of course, if you overpay in taxes, you will receive a refund. That's what a tax refund is basically overpaying to the IRS or being eligible for those refundable credits that you all may receive this tax season. So, just a quick story here. I had a client that was a business owner, and they actually did their taxes themselves, and they were missing out on a lot of deductions. Thankfully, they did have receipts and great record keeping, so we just had to go back in and amend those taxes to add those deductions to help them lower their taxable income. And in the end, they did end up receiving a tax refund, which is always great when we are working with our clients. So first, we're going to start with talking about top deductions for small business owners. One of the main top deductions for small business owners is deducting the home office expense. Of course, we know after COVID, a lot of people work from home now. A lot of people are running their businesses for their home, and they're not really in office as we normally would be as of pre-COVID. Of course, working from home saves you money and time, and it's also convenient as well. So when you are using that home deduction for your taxes, you want to make sure that you can either calculate that square footage that you have for your home. So when you are taking that home deduction, you just can't like write off your whole entire home. There are two ways that you can write off that home office deduction. You can do the simplified method, which is typically $5 square foot up to 300 square feet of your home. By using the simplified method, it helps you eliminate time and consuming record keeping as well. Again, when you are working from home, you must have a dedicated area and a dedicated space for your home office. I do have a separate office in my home, so I work between my home office, and I also actually have a physical location as well. So I do work from two different places. But if you are mainly working from home, you want to make sure that you have that space. And again, that is the simplified method when it comes to taking that home office deduction. And the second way to claim the home office deduction is by taking the actual expense. This is directly related to the expenses of your home. Now, taking the direct expense does does qualify you to maybe have a better outcome when it comes to your taxes, but you really need to have great record keeping when it comes to taking that home office deduction and you want to do the actual expense. Typically, you have to divide the amount of your square footage by the total amount of your home, and whatever that percentage is, you can use that percentage to write off for your utilities or even your rent. So depending on how big your home office is, just say if you use 20% of your home, you'll be able to write off like 20% of your electric bill, 20% of maybe your rent as well when it comes to that home office deduction. But you have to make sure that you actually have a profit in your business when you are claiming that home office deduction, especially when you want to do those actual expenses. Because I know a lot of times people say, oh, well, I work from home, and how about writing off my light bill, my water bill? But you actually need to have that record keeping to show that as well. And again, you always want to have records just in case of an audit, so that way we are able to tell the IRS exactly everything that is going on with you, just in case you do have an audit. The second deduction that we are going to talk about when it comes to a business. Hey Deja, hey Yolanda, hey Devontae, Terry, thanks for joining. We are talking about deductions. So your second deduction that you want to take, or not just want to take, but another deduction that you can take is the vehicle expense. So there are two options that you can choose when you are taking the vehicle expense. You can either take the actual cost of the vehicle, or your expenses, I should say, on that vehicle, or you can take the mileage. I know a lot of people want to take mileage, but you actually have to keep track of your mileage. We cannot guesstimate how much mileage you've actually driven. And if it was personal or business, I would recommend that you download maybe like a mile tracking app. I've used Mile IQ before. I actually have them on my phone. I'm not in partnership with them or anything, so I'm not saying that to like download to get any money, but I've used Mile IQ before, and it seems pretty efficient. I like it. It helps me keep up my mileage. So if you are someone who wants to track your mileage, I mean, you can do it handwritten, but honestly, in this new day of age, just go ahead and use your phone and download a mile tracking app. Um, as far as 2024 goes, you are allowed to deduct 67 cents per mile for 2024. And for this year, 2025, it is going up to 70 cents per mile. So, I mean, that's good. We're almost at $1. And again, that's when you want to take that mileage instead of the actual expense. But if you do want to take that actual expense and it gets you a better taxable income, some expenses could be like maybe a car wash or gas if you have any tolls, insurance, repairs, or anything like that that you have on the vehicle. And then also, if you lease your vehicle as well, you'll be able to deduct the payments. But you have to make sure that if it is not just fully used for business, you have to track those basically mileage and percentage of what you use for actual business and then what you use for actual personal, because a lot of times business owners, we use our personal vehicles to conduct business or maybe go see a client. So you want to track that. You want to track that percentage, and then that percentage is what the amount that you can write off. Again, your tax advisors, we are not psychic, so we do not know, how much you're actually driving or how much you're actually using. This is why we have you make sure that you keep those records throughout the year, so when it is time to file your taxes, it is more seamless. Again, if you are using your vehicle for both your business and personal, you can only deduct the business portion of your lease payments and associate expenses for that. So even if you go buy, brand new tires, and you spend $500 on tires, you're not going to deduct the whole entire $500 if you do not use that vehicle 100% for business. You have to learn those percentages, or even get with a tax advisor to help you with through that throughout the year. again, if you have a lease payment that's probably like maybe $500, and you use your car 60% of for your business, you will be able to write off 300 per month for your lease. But you just can't say, oh yeah, I have a car and I use it for business. I pay $500 a month, so I want to write off the entire 500. Like, no, that's not how that works. You want to make sure again that you keep track of your miles, even if you feel like you do want to take the actual expense instead of the mileage. You want to make sure that you still keep track of your mileage because we want to see the best outcome for you. I know some people may say, okay, I didn't track mileage, so let's just take the actual expenses, and some people do track both, again, which is good, so we can use those tax strategies to see which actually works for you. Another deduction that business owners can take, which will be office supplies and equipment, everything from your laptop, printer, pens, papers, anything that you use for your office, that is deductible as well. And if you have any, maybe like laptops or computers, you can depreciate those, or you can do a bonus depreciation, which I believe is at 80% right now. So where you can write the entire thing off at an 80%, or you can just take the deduction, or depreciation, I should say, over that laptop. So if you pay $1,000 for your laptop or your computer and you wanted to depreciate it, you would just take a certain percentage off of that every year until the use of the life is expensed. And I believe for laptops, it's around 5 years. But don't quote me on that, but I think it is. Another deduction that you can take as a business owner is marketing and advertising. That can include your website, ads, business cards. That is considered marketing. So just like this shirt that I have on, LC Financial Solution, could be considered a marketing and advertising. I have a banner here behind me with my business logo that is considered advertising as well. Anything that helps you be seen more as a business owner could be marketing and advertising as well. Another deduction that you can take as a business owner is professional development. So, courses, conferences, certifications, or investment into your business. So, as of right now, I am taking the IRS Enrolled Agent Test, which is a certification only administered by the IRS to help me. Be able to assist clients in all 50 states when it comes to doing tax resolution cases and audits and such. Hey Terry, thanks for joining. I am going over tax deductions for business owners and high income earners. So far, we've went over the home office deduction, vehicle deduction, office supplies, marketing, and now we are talking about professional development. So whenever you are in your business, when you want to expand your knowledge, keep track of those records because you can write that off. Any classes that you are taking, any conferences that you may attend to help expand your knowledge and build your business, you will be able to take that as an expense as well. Thank you, Terry. I appreciate it. Another expense people love to take as a business owner is travel expenses. Travel can include airfare, lodging, meals on the business trip, no entertainment. So if you are on a business trip and you want to go see Usher in Vegas, that don't count. You got to pay for Usher. We can't deduct that off. But if you are out, traveling for business, you are able to write those deductions off. When you are claiming meals, you can only do 50%. So even if you are taking a client out to dinner, and the dinner was $100, you can only claim 50% of that meal. And again, you cannot deduct entertainment, even if you wanted to take your clients to the Usher concert. You cannot deduct that to try to win a client over, even though you might win your client over depending on, what industry that you're in. But entertainment, you cannot write off as a deduction, but for lodging, meals, you can definitely write that off. Again, you want to make sure that you are keeping those records. So just in case of an audit, you can always have it there. And a lot of times you may deal with a tax professional who may not ask for a lot of paperwork. I am one of the tax professionals that asks for a lot of paperwork because I have worked with clients that are in audits or maybe trying to do like a criminal investigation. And we are trying to gather all of these documents. Well, they are trying to gather all the documents and bring them to me so we can review them. But if you go ahead and do it now in the beginning, you don't have to worry about it. And not trying to scare you and say, oh, you can do for an audit, you may be due for an audit. Not everyone will be due for an audit, but you never know when the IRS just want to reach their hand in the cookie jar and pull your name. So my goal here at LC Financial Solutions is to have you prepared for that just in case. I always like that precautionary. Moving right along, the next deduction we will talk about will be actually deductions for high income earners, but this can also include business owners as well. We want to talk about retirement contributions. Retirement. I'm going to make a side note here. I have a seminar coming up May 22nd, that's going to tell you how to strategize with maximizing your wealth and minimizing your taxes. So definitely, if you are in the Metro East area, make sure that you can attend that. It's on March 22nd. It's from 12 to 2. I will be going over ways to maximize your wealth and just help you build a better future for yourself and actually help you sit down with that plan as you see your future and actually bring your future to life. But back to retirement contributions, this is a deduction for high income earners and businesses as well. A lot of times people have contributions through their job, which is like the 401k, the Roth. If you are a business owner, you might have a SEP, IRA, things of that sort. You can contribute up to $7,000. Was actually increased to $7,000 because it was $6,500. So now you can contribute up to $7,000 in your 401k or your Roth through your employer, and of course that will be deducted through your payroll services. We do have those individual retirement accounts, again, which is basically IRAs, 401ks, things of that sort, where you can deduct up to that $7,000 as the contribution limit. And then, of course, if you are over 50 with the IRA, you do get a catch up where they give you an extra $1,000 to go ahead and start investing. As you continue to watch my lives every Thursday, throughout the year, I'm going to get deeper and deeper into retirement and investments because everyone deserves to retire wealthy. So I want to make sure that everyone that tunes into my live is knowledgeable about different retirement plans, if they're a business owner or even a W-2 worker, to help you retire. Because again, we all want to make sure that we are living the life that we dream. And when we are 50, 60 years old, 70, we don't want to have to worry about how we're going to pay our bills. So as I continue to do more lives throughout the year, you will see me talk more and more about retirement to help you retire wealthy. And again, like I said, the retirement contribution, it is for high income earners and business owners as well. If you guys are interested, we can set up a consultation to help you get some tax planning strategies in place to help you lower your annual gross income so you don't have to pay the IRS. That is a way that you can have a lower tax bill if you owe, because I know there are a lot of business owners who make a lot of money, but they tend to end up owing. And you owe because you don't have a tax strategist. You need LC Financial Solutions in your life. Another tax deduction that you can take as a high income earner is the health savings account. If you follow my page, you've probably seen me post a few times about the health savings account. I love health savings account. Those are with your pre-tax dollars. So if you are working, your employer typically will match what you put in with your pre-tax dollars, and you can use your health savings account for all medical expenses. They even have websites that are typically dedicated strictly to HSA eligible products. So you can get all types of things. Sometimes they have like deodorant, they have Vaseline, lotions. Sometimes you may need like a knee brace. Like they have different items that you can get. Even in feminine hygiene products, you can use your HSA for. through your employer, but you have to have a high deductible plan in order to qualify for the health savings account. So I know enrollment just passed, but if you don't have it, you can look forward for this 2025 year to where you can invest into those HSAs. And again, you have to have that high deductible plan in order to qualify for that. And again, read your terms and conditions because your employer should also contribute to your HSA, which will double up your money. Mine comes out my check biweekly, so I actually invest into it biweekly, and my employer does as well. To be eligible for the HSA, again, you have to have a high deductible plan. And there is a limit that you can invest. So if you are single, self coverage, basically, you can only add about $1,600 into the account. If you have a family, you can do, I believe, maybe 3,000 coverage. And then, of course, well, that's the minimum. So the minimum you can put into your HSA is 1,000 for single, and if you have a family, is 3,000. But the maximum for out of pocket for the high deduction will be about 8,000 for families. I mean, self coverage. It doubles up for families as well. So I always like to say, get the health savings account because not only if you leave your job, you get to take that with you. The health savings account is not the same thing as the flexible spending account. The flexible spending account your employer owns, and that's more of like a use it or lose it type of thing. And then if you don't use everything, then they probably give you a couple months to use it, but it's only going to be at a fraction of what you already put in. So when you are paying for that medical insurance, health insurance, or dental vision, make sure you are actually going to the doctor because that's the whole point of it. Even if you are going once a year for your examinations, use those benefits. You want to make sure that you are using those benefits. And again, with that HSA, the health savings account, the tax advantage, again, the contributions are tax deductible or pre-tax if they are made through your employer. And then they also grow as well tax free. And then you can also withdraw money from your HSA as well, but it needs to be for medical expenses. If you withdraw money from your HSA and it's not a medical expense, you will receive, I believe, a 20% penalty. Thank you, Deja. Thank you. You will receive a 20% penalty if you withdraw that money, unless you're over the age of, I believe, 50 and a half, to where you can withdraw for that HSA. And then there is no penalty if you do not use it for medical purposes. But again, I am a HSA advocate because I just love spending money, especially when it comes to those medical expenses that I may need. I do have an entire family, so whenever I have to pay for a copay, even medicines is covered. My kids need glasses. It's covered. If I need glasses, I can go ahead and pay that. I don't actually have to pay money out of my pocket. I can use my HSA. And remember, that does go with you when you leave your employer, not the flexible spending account. Another deduction that you can use as a high income earner is charitable contributions. You can do cash and non-cash to reduce your taxable income. Again, please see your tax advisor because you can only deduct a certain percentage of your income when it comes to charity. And also when you donate to charity, again, make sure you have those receipts. You can't say that you gave the Goodwill $10,000 worth of clothes. Like, we got to be for real. Because you do have to get the fair market value on that as well. I'm not going to get too in depth about charitable deductions because, again, that will take a tax strategy call so we can actually see where you are in your income level and then how those charitable deductions or contributions can help you overall as well as a high income earner. The next topic that we're going to talk about to help you save deductions is your mortgage interest and property taxes. You can claim these deductions to reduce the overall tax burden, even state and local tax, which is at a $10,000 cap. So if you do pay into your state and local taxes, mortgage interest, property taxes, those can adjust your income too, to help bring that tax bill down if you have one. Another big deduction that I am seeing with clients, mainly down south, is the energy efficient upgrades. So any home improvements, as far as like solar panels or any energy efficient windows, those have specific credits as well that can help you minimize your taxes over time. But again, you want to get with your tax strategist. LC Financial Solutions here. So we can actually put together a tax plan for you to make sure that you are using these deductions correctly and efficiently. Some common mistakes that you want to avoid when claiming deductions as a business owner or a high income earner is forgetting to keep receipts and proper documentation. A lot of times, a lot of people do not just keep track. I mean, it's some people keep track in their shoebox, which I feel like a shoebox full of receipts is just as much as a headache as not having documents when it comes to organizing as well. Good evening. Good evening. Thanks for joining. But yeah, that is a common mistake, not keeping those records. You want to be able to keep your records. And if you are bad with keeping records, go to your tax advisor. They will help you throughout the year. We actually want you to come to us throughout the year to help you plan for tax strategies for the upcoming year. So I know a lot of times people may owe, just say you owe your taxes for this year, for 2024 tax season, and you may owe. And now you're trying to think of ways to not owe or lower that taxable income. You need tax planning. Next week, I will be talking about the difference between tax preparation and tax planning. Welcome, welcome, welcome. Another common mistake to avoid is mixing personal and business expense. I preach this all the time. Separate those expenses. We have a lot of people in this chat and even just on my timeline period who has a business. You do not want to mix those expenses. Go ahead and get a separate account so it's easier to track. And also when it comes to bookkeeping, you're not waiting until March to try to get 12 months of bookkeeping done. That does take time and effort. And bookkeeping is a different fee from tax preparation. I don't think anyone that I've met in the tax industry just charges for tax preparation if you need bookkeeping. If you need bookkeeping, that is an additional fee. But again, you want to not mix that personal with business. That's why you do need a tax strategist throughout the year. Because again, if you are a business owner and just say you bake cakes, like your job is to bake cakes. You shouldn't have to do your marketing and do your taxes and do your bookkeeping. Like at some point as a business owner, you have to learn how to delegate tasks within your businesses. One thing that I delegate is marketing. I am investing in other ways to market and have other people marketing for me. As my business expand, I cannot do everything within my business, so I do delegate. And I do recommend that no matter if you are business just starting out or a high income earning business, you need to be able to delegate. And especially when it comes to taxes, because again, as a tax advisor, this is what I study for day in and day out, learning about those different tax laws. Another common mistake that you will want to avoid is overlooking the small deductions, like your software subscriptions. If you are paying maybe for your Google business page, or even your Google Gmail account, if you are paying for that professionally, you want to make sure that you are adding up those small subscriptions. I have a few subscriptions. Like StreamYard is one. I have a different mailing address that I pay for, and it's not really a big expense, so it's not really affecting anything. But again, you still want to keep track of that, even if the expense is $9.99 a month. For those business owners, you want to make sure that you are keeping track of those subscriptions. And the most common mistake to avoid is failing to consult a tax advisor. for complex situation, because again, you can always Google things or look on TikTok, but you also want to make sure that you are going to someone who knows about taxes and can help you with that situation. A lot of times people feel like, oh, I'm gonna just go online and file my taxes because it's just easier to do. But when you are looking for to minimize those taxes or to maximize your wealth, you want to consult with a tax advisor to help you with that planning. The whole point to have a tax advisor, tax strategist, is to help you again maximize your income and minimize your taxes. This is the whole purpose of why we're here. Some key actions that you all want to take away. Again, we talked about deductions for business owners, high income earners, and how to avoid these deductions. This live will stay up. So if you all missed the information, you can definitely go back and watch the replay. Make sure that you comment replay um, in the comments as well. And again, if you are looking for a tax strategist to help you maximize your income and lower your tax liability, please set up a consultation with me. You can either send me a message on my business page, LC Financial Solutions, or my personal page, Letitia Wilson. You can also reach me at our website at www.lcfinancialsolutions.com. Again, thank you all for tuning in. And don't forget, March 22nd will be my first in-person seminar for 2025, which is titled Financial Power Play, Strategies to Maximize Wealth and Minimize Taxes. As I mentioned before, as we go along through the year, you're going to hear me start talking about more and more about maximizing your wealth, so we can all retire wealthy. Everyone deserves to retire wealthy. And remember, guys, every dollar that you save on taxes is a dollar that you can reinvest into your dreams. Thank you all for joining. Have a great night. I appreciate your time. And again, go ahead and book that consultation with LC Financial Solutions. We can go ahead and get you on the right track when it comes to your tax strategies. Have a great night, everyone. Thank you.